All right, good morning, everyone. This is a special live stream. We got Cody Davis on and Justin Cambra. So, morning, fellas.
Good morning.
Howdy.
Happy Thursday.
Yeah, I didn't even realize somebody mentioned it to me. You guys are somewhat in the same area, I guess you would say, kind of, sort of.
Sort of. We're
Yeah,
like 4 hours apart.
Justin owns all the parking lots around where I used to live.
yeah, cool. So this is gonna be a fun episode. I think all of us or all three of us are kind of at different points, but we've all gone through this phase of kind of maybe pivoting or reevaluating. And I know last time Justin was on, he was really interested to get on a live stream with Cody because he kind of want to pick Cody's brain. I think of what Cody's going through because I think a lot of people are seeing on social media that Cody is kind of, maybe cleaning up his portfolio a little bit. So, Justin, do you have anything you want to start off with for Cody?
Yeah, I was the reason for the initial reach out was I think I'm going through very similar as Cody, and I wanted to see if that was true. So, my main up until I'd say middle of 24, everything was max risk on, mass expansion, more is better. And about mid 24, I was like, more properties, more problems is what I was running into. And then I was like, I shifted to a less is more really for about a little over a year now. And so I've been selling off portfolio, transitioning less of the C class middle Midwest, doing 1031s more into local. And so my thought is like, let me bring more of my assets 1 hour for me, where I'm an agent, I can have a little bit more control and trying to get bigger properties, bigger, maybe more dollar amount than doors when I'm shifting from Midwest to here, better tenants and more stable income. So that's what I've been focusing on the last year. And it sounds like, from what I can see, at least on social media, it seems similar to Cody. So I'm interested to see kind of where he's been transitioning or focusing on last year.
Yeah, I paid my highest price per door I've ever paid recently, 235,000 and change per unit.
Mm-hmm.
So I've shifted to that higher dollar figure. The rents are closer to 2,000
Yep.
now, which I've been getting that more so from Dion, I think, than anybody. But the
Right.
idea of having more rental income with less, I'm still gonna have a bigger portfolio, but yeah, right now I'm in a transitionary period. I'm looking at selling my older buildings and 1031ing all of them into brand new construction. So
Mm-hmm.
I'll cut my unit count from originally I was over 200, realized that didn't matter. Now I'm down to a little over 100, and when everything is all settled out, I'll probably have 50 brand new apartments on one street. So my concentration risk is a little higher, but my maintenance risk is gone.
Love it. And that's in Moses Lake, I assume the where the new builds.
Yeah, so it's in Moses Lake, and my mission right now is to consolidate into it. The new stuff I'm buying is seller financed from some folks that I've been building relationships with for quite a while, but they should cash flow pretty strong. And so my objective is to then roll that cash flow into more value add deals,
Mm-hmm.
but have a base of predictable cash flow, because you can have good cash flow on old stuff, but it can be far from predictable.
That's exactly where I'm at right now. It's like the real estate gods know if you need the cash, stuff starts happening, right? Tenant turnover, I got break-ins, and when you have a lot of properties, at my peak I was 145 units and you're like 200, right? So it doesn't take much when you start having a lot of properties. If a couple of them start going bad, it's like, at times it feels like the Titanic, right? The water goes over the next bulkhead and then it, all happens at once. So can go up fast and can go down fast.
So how much of a transition have you already done with your portfolio?
So last year, I think I sold about 15. And these are duplex, triplexes, fourplexes in the Midwest. I then bought three in Seattle area. So net 12 down. year over year. Some of that also similar. I'm thinking to you is I had a couple partnerships in last year, so I had 3 partnerships. By selling a couple of the properties off, I was able to get out of 2 of them. So it's just right now of the 33, 29 properties is just me by myself. Then there's 3 or 4 properties that are in a partnership. That partnership wants to continue to grow and do stuff long term. So I'm still into that one. A little bit more equal weighted on what we do. So I'm okay with that. But my goal is, less is more is also on the bookkeeping side, on the tax management side, on the investor, the partnership stuff. So, as I think about it in the perfect world long term, I'd like less properties, higher value, where it's just me. Because if it's just me, like I only have to answer to myself. Versus when you have the partnerships, and then there's competing priorities, and it helped me get to where I am today. But the next phase of my investing, I'm wanting to more go just on my own stuff.
Has your cash flow changed for better or for worse in this transition?
In the transition right now, it's actually slightly worse. So when I'm 1031ing into stuff, like the stuff that I had that I was selling, that was a lot of it was commercial debt that it ballooned in 25-ish, right? So last year I was like, well, I got these balloons coming. So it kind of was like a perfect storm. I had the balloons coming, wanted to get out of partnerships, wanted to get bigger and better properties. So as I was getting out of 3.5%, I'm getting into like 7 and 8%. So cash flow is net worse, because over here, basically the goal was to, if I can get 1031 into something that's break even, that was a goal for me. Now, hopefully in the next year, as rates drop, then I can do cash out refinances, get lower interest rate cash flow, and then also pull the equity out. But as it sits right now, net worse on cash flow.
So
Okay.
sounds like both of you, was there like a certain moment, like for maybe like you, Justin, was there a certain moment that made things change for you as far as was it a different investor you encountered or a different mentor you started following, or how did that all work out for you?
So there's 2 main people. So Thatch, it's probably in 2013. He's like, dude, you got lots of stuff going on. Simplify your life, right? That was in, I think it was January or February of 23. And then the more I hang out with Dion, I'm like, dude, this is nice, because I think he has in the teens of units, and it's maybe like 8 or 10 properties, but he's easygoing, very stress free. And I'm like, meanwhile, I've got floods and vagrants and, people not paying me like in 4 different states. And I'm like, at the same time, I'm trying to build my real estate agent business and team. And so I'm like, as I'm focusing more on that, I can't be putting all this focus on these other assets. So part of that helps me singularize my focus on growing the real estate agent business, so I can spend less time on all the problem properties in the Midwest.
I love that about Thatch. Like you kind of get the impression that he's a go 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 go, and he is, and bigger is better. But actually, when you talk to him or see some of his live streams or talk when he speaks, it's like he's actually not, right. He's really about leveraging your W-2, a small portfolio, net worth, certain amount of cash flow. So it's very unique hearing like someone on his level speaking exactly what you were saying, like simplify your life. And you, Cody, I think what everyone was drawn to for you was they saw this young individual doing all these creative finance deals, seller finance deals, this huge portfolio. But what it sounds like there was a turning point for you also, where it's kind of like, Dion's way of life is very interesting to me. So was there a certain moment for you that really kind of made you pivot?
Well, it's kind of like a spoof off of what Dion's done. My mentor owns majority of his stuff in cash. What he did in the beginning was he levered up on the old stuff, and then he paid it off. And then he got into building, and he built some new stuff, and eventually got to the point where he had those brand new, they were like townhome style quadplexes, and then he built townhome style sevenplexes, and he got those paid off. And he has the maximum amount of cash flow with the least amount of rentals. It just happens, instead of in the teens, he's got over 60 townhomes that are basically paid for in cash. And I realized that the profit he has is more than some of the guys online, the guys and gals that have 1,000 units and all their various structures that they've been able to finagle together. So I realized, you know what? The happiest people I know have the least amount of stuff going on with the most amount of profit, whether it's a 70-unit portfolio, a 700-unit portfolio, or a 19-unit portfolio, whatever it may be. They simplified their universe, and seeing that enough, it's like, all right, that's what I'm going to do. So a year and a half, 2 years later, after we met, when we were first talking about it, I've just been looking at these people that are at peace financially, and I'm trying to replicate it. Built a big convoluted business, a couple hundred rentals, and I think in a year from now, I'll probably be between 50 and 100 because of looking at those people, but no partners on any of those. So that is exciting.
Do you ever get pushback because of your age? Like people are kind of like, why are you trying to slow down in a sense right now? Like, why not go for more?
I wouldn't say it's, well, I mean, maybe pushback. It might just be semantics, but there's some wealthier people that I've talked to, and they're like, you should lever up when you're young. But I talk to them behind closed doors, and they're like, you know what? You have enough. If you solidify your base, you can do whatever you want 10 years, 5 years. But they're looking out the long term. Most people have to lever up really high when they're young. And from their perspective, I did that. I borrowed a little over $20 million at one point. Granted, I had partners on that. That wasn't just me. But I was up to like $20 million in debt and close to 30 million in real estate with the various partnerships that I had. And so I did the levering up thing, and now their perspective is, you know what, solidify your base. You're so financially ahead that you don't need to keep doing the leverage thing. You can do it smart when you want to do it, but don't do it because you think you have to. And I took that advice to heart.
I'll let Justin kind of elaborate on his answer or response, but Jim, the grumpy contractor, asks, would you change the way you started, I guess, in this journey? And Justin kind of replies, no, the learning and action is key. But do you want to kind of dig into that a little bit more, Justin?
Yeah, so the whole thing, and because I work with a lot of other newer investors, and they get hung up on the analysis paralysis thing. So, if you look at Cody, right? I think he was 19 or 18 or something when he started. He got in and immediately was taking the action. For me, I think I was like 38 or something, 37 when I started. And the key was that I just started learning something and taking action. Even little things of like going to my first meetup. I remember going to my first meetup and talking to people, and I was like, I don't know what I'm doing. And I would sit in the corner, and I was like, oh my God, I'm sweating. I'm nervous. But those little steps over time accumulated to where I'm at today. So I wouldn't change any of that. And you just become a more smarter and sophisticated. For me, it took 9 years. Cody, it took him 2 years to figure it out. But I'm in the same thing where I'm looking for peace of mind. And so, but I couldn't get to this stage if I didn't do all that learning and the action that I took, and doing the partnerships and in-state, out-of-state, short, medium, long-term, all that kind of stuff. You got to get that experience somewhere. I like it doing the stuff real world. What I like to say, live ammo. Like, you can read about it in a book, but when you're dealing with problems in real life, there is no opportunity to not do it. You have to do something. And so that's the quickest way to learn, and it'll help you over time to where you don't do the same mistakes again.
Before Cody can answer, Hyder does say, but Justin, how is that when you're still in your 20s?
I'm still amazed because I always remember Cody hit me up. Gosh, I was still at Amazon, so it would have been like 21 or 22 maybe. He was talking to me about my duplex down in South Seattle, and I was just amazed because he's already has the lingo, the nomenclature, the financial savviness. So, if at that time I really didn't know him as a person, like in person yet. On the phone, I didn't know he was 20 or 18, well, however old he was, right? So you are what you think, right? So like, even though I was older than when I started, as long as you go in there and act, do the research, have confidence, you can do almost anything. Because a lot of these seller finance deals is, do they know, like, and trust you? And it's how you come across, right? And a lot of times is like, both Cody and I could say the same thing to the same person. They're going to know, like, and trust one of us because the way we say it, how we make them feel, or how we simplify things, right? Versus if you get somebody else that hasn't done it before, they may not explain it to where they're confused, and then they're not comfortable with moving forward. And it's just literally like know, like, and trust, and the confidence to be able to explain it. And then that's how you get people to lend money to you, sell their properties to you on creative financing, or help you out.
For you, Cody, would you have done or changed anything when you started? I mean, especially for you too, like Justin kind of touched on at your age. Like, how was it? How were you able to get these people to know, like, and trust you so well to do these deals in a sense?
Yeah, before I jump into that, Justin said it only took me 2 years to figure it out. I'm going on year 7 shortly, so
Oh, really?
I'm still figuring it out. I'm not
Yeah.
21 anymore. Sadly, it seems like every day that goes by, I'm a little older. I wouldn't change anything because I wouldn't have been able to change anything. I got started as an introvert, didn't know a lot, thought I knew a lot. I was a little good at math back then. That's what I had to fall back on. But I didn't know anything about real estate. So I feel like what I did was the appropriate path forward. I met with a lot of people that had done a lot of things I hadn't done, got the best takeaways I could from those individuals, went to a lot of meetups, learned from those people, interviewed people, got interviewed by people, learned what I was uncomfortable about because I wasn't good at talking with folks. It was just very hard, touchy subject for me. So I feel like I did what I had to do to get here. And if I had to do it again and I didn't know what I know now, I would try and take the same route. I'd go meet with as many people as I could that had done what I wanted to do.
I think that's that's the hardest part is, it's easy to look back and say you do these things different or do that differently. But I think the biggest thing, and especially you see a lot of these comments in the chat, I think the biggest thing is taking action. I think that's the number one thing is taking action and learning from your mistakes. I think it's so easy to get beat up in this industry, and a lot of people just quit and don't move forward. So I think that's what's so great about this community. Everyone is kind of learning from each other, willing to share their mistakes. And like Frank, old guy REI, he's in the chat, and unfortunately, he's been taking a beating this year. He's been going through a lot of stuff, and but he's putting it out there. He's sharing with everyone in the community. All his videos on his YouTube. He talks about the struggles, but he's putting it out there, and then hopefully other people that are earlier than him are seeing that and learning and trying to also push forward and realize that it's just part of the journey, right? Going through these struggles, but also going through these struggles is like we're talking about today is pivoting and reevaluating your portfolio. And so maybe Cody, for you, is there like you're in this transition phase, is there anything still yet with your portfolio that kind of you're trying to figure out what to do with right now?
I'm working on getting liquid. So I've been buying a couple deals based off of price. I'm flipping a couple small properties that don't fit the long-term hold strategy. Doing some cash out refinances. I got rid of majority of my partners so that when I lever up an asset, I get 100% of the benefit. That way I don't have to max leverage everything to get the liquidity that I need. But liquidity right now is a big one for me because I've never had it. It's fun to build a portfolio. It's more fun to feel the benefits of it. So I'm prioritizing that. And over the next probably 12 to 18 months, I'm going to find a way to transition all of my older properties into new properties. And I think at the end of that adventure, I should be left with 25,000 a month, 30,000 a month, somewhere in that ballpark of net cash flow, whether I work or not.
Nice. Before I get into Jim's question, so Justin, for you, it seems like you have a good vision on where you're trying to head down this path, pivoting wise. But is there anything else in your portfolio that's kind of you're questioning what you're going to do with it or what the direction is going to be for it?
That's actually very similar to Cody, like shifting, downshifting in a way, solidifying, the base. What I was just meeting with another investor last night, and what I want to do is like go back to the basics. Yes, get liquidity, but I want to get back to where I have a core nucleus of quality properties that are paid off. Those just don't touch it. I'm calling it like the fortress, right? And then everything else, I can go full risk on at all times because, like, as long as I've got my base or that's the steady eddy income coming in, that'll keep me afloat in the ups and the downs and all that, right? When I'm, I had all the portfolio and you're full risk on, you're exposing, or I was exposing myself to more risk, because like a lot of mine are on 5-year commercial balloons, right? So what I'm trying to get to is a more stabilized, less risk position and more liquidity. Because I'm sure Cody will second this. When you buy a lot of these older properties, you can get great deals on them, but they're a ticking time bomb. You're going to be spending money over time. A lot of these ones in Milwaukee are 100 years old. So the reason why they're so cheap is because of that, and there's a lot of deferred maintenance. So you want to come in, improve it, get your money, move out, roll up, get higher and higher and higher. Because if you just keep holding on to it long term, you're going to be, putting new roofs on and foundation work and all that kind of stuff, and those couple $100 a month are gone with a furnace or a roof, for a year or a couple years of cash flow. So, you know, liquidity and having a paid off portion, I'm calling the fortress for a peace of mind. That's what I'm looking for. And then as I look to add to the portfolio, like it gives me opportunity to get better assets that I want to own long term versus, hey, I want this just for the cash flow sake. So I've been shifting that, like I said, over the last year. And the goal is like if I can keep doing these single family with Dadu plays, or even I might even do more house hacks, even though I'm in my mid 40s, if it makes sense to where good long term assets that are going to appreciate that don't have a super high amount of deferred work that needs to be done to them.
All right, so Jim is really gonna press you guys on this, I believe. So he said there has to be one thing or a deal you would not have done. So Cody, is there something that like you said, it's hard to when you look back, it's easy to say you do this, but is there a deal that you wouldn't have done or didn't done anything differently in the beginning?
One of the biggest mistakes that I've been prone to making is giving up equity in my ideas before I should. I've done that again and again, and it's been in companies, properties. I've tried to make people happy along the way, and so I'll give up ownership even if someone doesn't bring anything to the table. I've done that on countless adventures. So that's something that I would try and avoid if I were starting over. I wouldn't just give someone something to help them be part of it if they're not contributing anything. But we all make mistakes and we all learn. Those were adventures I could have taken on solo and probably should have taken on solo. But if I did, I wouldn't have learned some of the lessons I learned on why it was so important to do it that way. So I'm happy it played out the way it did. It's just something that I have to be cognizant of moving forward.
What about you, Justin? If Jim is pressing you on this, is there one thing or a deal you would not have done?
There's a couple. There's one that I currently have right now. It's almost finished, but the guy that I bought it from was like an old sage, crafty guy who was smarter than me. He was like a Columbo guy, but come to find out, he was not forthcoming with information about the property. So it ended up hurting me in the long run. So basically, he wasn't forthright with like the neighborhood relationship, the development he'd done with the property, and issues with the sewer, and which I'll probably lose $100,000 because of all the stuff with this. A project I should have been in and out in a year. I'm at going to be 2.5 years to get out of it. Almost had to sue neighbors and sewer damage. It's definitely trying. And the underlying issue with this one is my whole thing was like, it's like Gordon Gecko. Greed is good, right? Like I wanted more properties. I wanted to continue to expand. I wanted to try something new. And in this scenario, if I would have had higher standards, which Stats actually, I asked Stats about it, and he's like, if it was me, I wouldn't do this deal because I want higher margins. And I was like, well, but I want to do this deal so I can learn, not just for myself, but as I'm helping clients how to do these types of projects. In hindsight, I would have, less money issues, less stress if I didn't take this one. And it really boiled down to where the seller was not forthcoming with all the information about the property. So, uh, that's the Seattle property where I ended up doing fixing up the main house and then doing a dadu on the property. So, a lot of learnings out of it. Like I'm going to be a better investor for it, but definitely didn't need that amount of stress and that amount of headwind on liquidity.
Pink Wolf, I think this is referring to you, Cody. This says, from a business perspective, I can see your good karma radiating. I think that's when you're talking about, giving up some equity in deals and whatnot. For me, I think the biggest thing would be, and Dion touches on it quite a bit, is for myself, I probably liquidated my retirement accounts too soon in my journey, and went all in. If I kind of got a better footing, kind of on how this journey goes, I'd be a lot further ahead when I did probably access my retirement accounts to leverage or use. But I'm happy with what I did, but definitely I think I'd be a lot further along and better use of that capital if I kind of understood a little bit more what I was doing early on. And then the other side of it, I would say, and same thing is exactly how Zuber talked about it, is like syndications. I did enter some syndications early in my journey because I just thought it was easy, and throw this money in there, everyone's making money, and I probably didn't do as much due diligence as I should have. I just thought syndications are easy, everything's going up, and I would have definitely probably held off on it, or talked to more seasoned investors. I think at that time, like exactly like what Zuber said, everyone was making money. You had a lot of these new operators jumping into the syndication game, and this everything was, yes, oh, rents are going to increase 10% every year, right? This is our pro forma, and look at it, right? So definitely that would have been what I would have done differently. But let's see, Josh Burdick has a question for Cody. He says, do you see yourself staying in Moses Lake since you're building your portfolio there?
Not forever. I'll keep buying here. If you look at some of the metrics in this market, it's more than impressive compared to other areas. I'll have a lake house here someday when I'm not cash poor. So theoretically, in year 10, that's where the magic happens. You got a few more to go. But have a lake house here so I can visit the properties. Eventually, I'll buy a house on the west side. I will not likely be house hacking because my fiance and I want to start a family, and our goal is to have a house. But that'll probably be in University Place or Gig Harbor, and then I'll visit the portfolio once a month to see how it's doing. And hopefully, since it'll be all new construction, I will not have to be as active on the day-to-day.
Interesting. All right. Let's see. Carlos. Hey, Carlos is here, the handyman, the Fresno handyman. So he said, I have my son with me listening. He's 19. What advice can Cody give to him currently doing acquisition?
Well, my thought is if you figure out what goals you have, if you want to buy a duplex, when I was 18, right before my 19th birthday, I put a Facebook post out there on a real estate investing group. It said, I want to have a duplex by 21. And that goal would lead me to have different conversations than if your son wants to have 20 rentals or a new construction single family rental or some stuff in the Midwest. I'd really figure out what it is you want before you start taking advice from anybody. Because if you don't know what you want, you're probably not going to get it.
Great advice. Yeah, I can't even. I'm the grandpa on this panel right now, so you guys are much younger than I am. So, but let's see, Justin. I think I know the answer to this, but which is harder, letting go of a property investment that's no longer serving you, or admitting you made the wrong bet?
Interesting. It's usually the same thing. But I'd probably say the latter. I think the latter one was the, admitting you made a mistake, it took me a while. Like we're talking about that one property in Seattle with that seller. Yes, that one hurts a lot. Cause like even part of the process, like, should I go? Something doesn't seem right about this guy, right? And in hindsight, there's so many like red flags, right? Cause like I ended up meeting him at his house one time and he wanted me to list that house for him. I'm like, okay, let's go check it out. And then like I go into one room, he's got a freaking grow lab in there. And he's like 70 years old. I'm like, oh my God. I mean, I didn't think you were into this stuff, And so, that was on me. Like there's all these signs that I shouldn't have done it. So it is hard to admit that you're wrong, especially as you're, if you're in a partnership, right? A long-term partnership with Cindy, and she always tells me like, I told you like 5 years ago to stop buying and just stabilize, And so hearing that, it doesn't feel good, but it is the right thing. Like if I listened to her, we wouldn't be in so many of these issues, right? I would have started consolidating and paying debt down and restructuring for more of a stable lifestyle. So yes, it is hard to admit that you're wrong. At least for me, it is.
Cody, you have anything you want to add to that, or?
Can you repeat the question?
It was, which is harder, letting go of a property investment that's no longer serving you, or admitting you made the wrong bet?
Well, I'd say it's which is harder. I mean, I've traded properties away before that were still serving me to separate from mistakes that I made with other partnerships. So I've done both in conjunction with each other. As long as it goes back to what I said earlier about, let's see, whose son? Carlos's son, Luke, right? You need to know what you want. I had to give up one of my first properties just to separate from a mistake that I made, that I acknowledged that I made. And giving up the property and walking away from a mistake was not too difficult to do because I knew exactly what I wanted. And trading those pieces with my partner to just walk away got me what I wanted. It gave me peace. So acknowledging you made a mistake is a first step, and then giving up a property that's either serving you or not serving you could be a solution for whatever you're looking for. And as long as you view it that way, it can become very easy.
I'm going to have to agree with Frank's old guy already. Yeah, comment in the chat here. It says Cody's an old soul, very wise.
Mhm.
Hyder says he makes a good point here. He says I tend to get taught when I take on a challenge for the sake of learning. That's not always good. I
Mhm.
can see that. Yeah, a lot of times, sometimes we use that as a reason for taking something on. We're going to learn and whatnot, but sometimes we can get in too deep a little bit. But I think it's that's what's great being in this community, right? We're able to bounce ideas off of and kind of get different perspectives, and people that are much further ahead of us are always going to give us advice as far as what they've gone through. And kind of like you said, Thatch was giving you this advice that I wouldn't do this deal, and you still went ahead, but you learned. But now you can look back and be, oh, Thatch kind of was right? He kind of pointed this out to me, and I think as we touched on, all three of us, I think Dion has really impacted kind of the way we think about things, or maybe the end goal in a sense. And I know Dion, yeah, he invested in Tesla recently for certain reasons, but he's primarily real estate. I believe, Cody, you're primarily real estate, correct?
Mm-hmm.
Justin, are you strictly real estate also, or you have other asset classes also in your portfolio?
100% real estate, and then real estate agent business as well, building that up. So yeah.
All right, perfect then. So, you're all kind of somewhat pivoting or trying to clean things up slightly. Do you see your guys' selves maybe adding another asset class to invest in once you kind of hit this end goal in a sense? So maybe Justin first.
Before I talk about asset class, I wanted to touch on something that Cody was saying. I really like the idea of you understanding what your focus is and then going towards that, because there's a lot of, and I'm sure Cody gets this a lot because he's well known, does a lot of podcasts and stuff where it's like mass expansion, then changing in strategy. Everyone on the outside's like, probably, why is he doing that? Questioning, like, don't you want to do this? Don't you want to do this? Why are you doing that? It's like, that's all noise, right? Cody has his vision, right? I'm working on my vision, and whatever that is, if you stay to that, you can have peace in what you're working on. What everyone else's opinion doesn't really matter, right? And so, like, as I was starting my career, I was wanting to build more because it looked good, it felt good. But now I'm like, hey, my goal is for peace of mind, liquidity, less stress. Uh, you know, Basically modeling more and more of Dion. So that's a good point to take away, is whether you're day one or day 10,000, is focusing on whatever your goal is and stick to that. Now, answering the question, would I get into other asset classes? I would get into other asset classes. So now,
Wait, but parking lot does not count now. That's not going to be counted.
well, I mean, it's
Yeah.
technically real estate. I'm renting what is it, 20 by 10 parking lot, right? Or parking stall, which, I mean, I wish I had 100 of these properties that had it, man. So it's the easiest money I make, and it literally just, because right now, like, I have a couple people moving out actually this week, so but I'll still be at like 3,000 a month just in parking income, and literally, like, it's a couple texts a month is all I do, right? Um, as long as everybody parks in the same spot, that's the only issue. Um, but in terms of asset classes, so the other asset class I'd get into is buying businesses. So me having a real estate team, so it's me and then like 6 other agents on the team. What I'm getting into now is effectively, Cody Sanchez is big into I have the book here, Main Street Millionaire, buying other businesses. So effectively, that's what I've been focusing on too. It just so happens that I'm buying out other real estate agents. And so there's a book called The Golden Handoff, where, if you're a person in a sales business, you only make money when you make sales. But when you retire, if you don't have like a 401k, your book of business, your relationships, that's where the money's at. So I talk to other agents that are retiring, and I try to get them to sell me their business. And it's actually, this book is great. I share the book with them. I talk to them about it, and I'm buying it out, but it's a rev share, so it's like the greatest thing ever, right? So as I work with their clients and transact, it's a rev share where you pay, when I get paid, let's just say it's 10,000. Year one, it's 70-30 me. I get 7,000, they get 3,000. Year two, I get 8,000, they get 2,000. Year three, it's 99,000 me, 10,000 them. Year four and beyond, I get all the income from that client as long in perpetuity, right? So for me, that's like an adjacent thing to real estate that I can leverage and start compounding. And anybody who's in the sales business knows the hardest thing is client acquisition. So I had my first golden handoff, i.e., buying a business, and like instantaneously got 500 clients overnight. Right, so I only need to convert a couple percentage of that, and that's like 100,000 plus a year thing. So I'm like, how do I find more of these agents, build those relationships over time, and then as they go to retire, then I take their business over. Not only helps me and then it feeds my team, but then these agents, they have money in retirement. So it's like everybody wins.
I love that. Yeah, acquiring a business. I think that's very popular right now. And what about you, Cody? Any thoughts in a different asset class to kind of venture into?
I have two. And one of them is not for investment. It's just having it to have it, which is a terrible strategy. Precious metals. So take cash flow, buy gold and silver, set it, forget it. It's just a store of wealth that's so different than what I have going on. I just have it. It is not an investment, but it is an asset class. So I will just start accumulating that. And I'd like to get to the point where I could buy one gold coin a month and not worry about it. Just have it on the side. The other thing is stacking money into S&P 500 and just do that for the long term. But just peeling off a little bit of cash flow, maybe 10% of the portfolio, throw it into that and let that accumulate over the long term. But yeah, I mean, I would view that as an investment. I wouldn't view the gold and the silver as an investment. And that's just having it to have it. It's completely different than what I got going on. Theoretically, it'll be valuable in 60 years. Maybe not, who knows? I mean, if we start mining on different planets, then it's going to go way down, but it's also pretty. So
Hyder says, yes, precious metals are insurance, not an investment. Hey, morning, Jacek. Not sure if you're still traveling. Hey, Casey, good morning from California. There was something here. Oh, here it is. I don't know. I'm not, Alexander Jane Spector. I have a startup idea for a hackathon in which we offer total career guidance using AI and VR. How does it sound? Not sure what. All right, well, maybe I can think about that a little bit. But Flavio is asking, Cody, have you thought that in your past life you were successful and in this life you just doubled down? It seems like you did this before.
I definitely don't feel like I've done this before. There's so much learning to do. If I've done this before, I've made way too many mistakes. I'll say that.
I think, from outside looking in, Cody does a great job of consistently connecting with people ahead of him with mentorship. You know, I'm learning that from Cody. I need more mentors like that. So like when I'm hanging out with like Dion and Thatch and stuff and seeing what they're doing, that helps. So that's a huge thing where it looks like we have everything going on, but I know for me personally, there's a lot of conversations like, oh shit, now what do I do? Like I haven't gotten to this position. How do I get out of it? And that's where you can lean on these mentors that you've been working with over time. And I know a lot of people like to help people that are asking the questions and doing the work. Because I get other people to ask me the same thing, and I love it when I'm working with them and I see them progress, and I continue to want to help them out. So I know that whoever this mentor that Cody's talking about, I'm sure they love it. They already have all the money they need, right? What is fulfilling for people is helping other people grow, and so I think Cody does a great job at that.
One of my mentors years ago said, Cody, what I did in the past, and this is going to happen to you, is I kept buying. And one day I looked up and I was up to my eyeballs in debt, and I almost had to pick which properties I was going to keep and which properties I was going to give away. And back there, they didn't have assignments of rents with loans. So you could steal the rents from one property and not pay that mortgage. And that's why that all became a thing. But he got up to his eyeballs in debt. He said, Cody, the way you're going, you're going to do the same thing. And you're either going to figure it out or you're going to go bankrupt. Either way, you're going to learn. And I'm grateful I got through that. But there's periods of time, people don't realize it, but most real estate investors are going to look around and be like, I have too much month at the end of my money and I'm feeling a little bit stuck. And you're just like, oh, I got to survive till the first, or I got to survive till the third, or whatever the day is that your rents come in. And you either figure it out or you don't. I mean, I know I've been there. Right now, I have a cash out refi that I was like, I really need this by this week. And it got delayed 2 weeks. I'm like, oh, I guess I'm going to figure it out. But it happens. I'm sure it's happened to Justin. It's probably happened to you, maybe. But the faster you scale, like that one mentor told me, the more susceptible you are to stuff like that, which is why I'm adjusting.
Yeah. I'm in that right now, basically, where it's like, and you were talking about gold and silver. I'm a big fan of gold and silver too. So, and I'm a big fan of infinite banking concept, their high cash value. So for me, like, I know myself, if I have money, I'm gonna buy stuff, right? And so, like, I have not touched my retirement. Now, I used to own some properties in my retirement, but I've sold some of those off. I only own one property in my retirement. Actually, it's in Moses Lake. But the rest of it is it's just cash. So it's like, that's in case of emergency. I have the 401k. It's like a solo 401k. Then I'm sitting on gold and silver as well. By design, it's hard to transact. It's heavy in taking it around, so it's like, between these two things, it helps me not spend the money. So, like, that forces me to, as I'm getting close to where I need to use that money, okay, now I'm like, okay, I've got to, like, restructure things around, either make more income, sell some assets off, or restructure some debt, or a combo of those to get me out of that. I love the saying you said, is that you've got more month left than when the money is, something like that.
Oh, yeah. I mean, some people got more money at the end of the month, and some people got more month at the end of their money. And
Exactly.
it's easy to have that where you're like, oh, shoot, I only need like another $5,000 to survive this month.
Right.
Oops. And some people it's 500, but some people it's 50,000. So it's like you can get yourself into a pickle of any size if you're not intelligent and willing to adjust.
Right.
Hyder says the stock market is not for me. There's no equity ownership, only beneficial ownership, and lots of nuance within that. Josh Burdick does say over leverage can eat you up. Justin, you kind of touched on infinite banking, but this question kind of revolves around maybe what's a money belief or investing rule you used to follow that you now completely abandoned? So like even like infinite banking, right? It's a different concept. Some people kind of go down that rabbit hole. Some people believe in it, some people don't. But what money belief or investing rule that you used to follow and that you've completely abandoned, possibly?
I'd say more so, like, out of college until I was like, call it mid-30s. Like, everything was like finding the right stock, and how can I invest in stocks and put money away, and over time it's going to work. Like, I've abandoned that because, like, in today's world, there's no opportunity for me to win. Like, with real estate, there's you have a chance. What is it? There's a chance for asymmetric returns because not everyone has the same amount of information, right? So, like, if you took it's like that millionaire show where you drop a millionaire or a billionaire somewhere, they're going to go make that money because they have knowledge and they operate in an area that they can use that knowledge to make money. Back in the day, I was like thinking I could make money in stocks, right? But in the AI world today, all that there's no edge that you have in stock. So like all mine is like, yes, real estate, but as I get into, do more of these buying business stuff, that's where you'd have some outsized return and opportunity to win in the money game. Because, like today's world, and I'd be interested to just get Cody's take because I don't think was ever in the W2 world. So I was in the W2 world, and then like even before I left Amazon, everyone was talking about how smart they are at trading stocks, making money, and Bitcoin and all that stuff. And then I'm like, the whole market is going up, and it's all propped up on it. And everybody's in like literally the same 7 stocks. So are you really that smart? Because like none of this stuff makes any sense to me, the price to earnings and all that kind of stuff. And at some point in time, this is all going to revert, unwind on the stock market. Now, could it unwind on the real estate market too? Yes, but people still got to live somewhere, right? So there's a little bit more safety net in that. So I'm interested to get Cody's mindset because, like, as I'm hanging out with friends, they all think they're like amazing because they bought Bitcoin and because they bought, Facebook, Nvidia, Netflix, Amazon, all those like that everybody else is buying. Is like, yeah, I don't really think that that's a repeatable thing in the long term. But let's see what Cody says in interactions with ours as friends.
Well, I mean, what you're referring to is like the idea of a perfect versus an imperfect market, and that's why I like real estate. Somebody in the transaction is going to know more than the other person,
right?
Which creates a lot of opportunity for upside. It's definitely not as easy as the TikTok people make it seem in real estate or crypto, or not in real estate, but stocks or crypto. It's like, oh, I'm going to buy in here and sell here because the line says it's going to go up. It's like, yeah, you can get a few of those right, but none of the people that are trading with real money are doing that. Is my 2 cents. I mean, people that are trading with billions of dollars or tens of millions of dollars aren't trading to get a little 1, 2, 4%. They're trading to not lose money and just have it beat inflation.
Right.
And if the little guy could do it predictably, the big guy would too, is my thought.
Right.
I also want to touch on, I think Justin was kind of heading down that path with Cody. Like Cody, like I said, you kind of started this journey for yourself, at such a young age. It almost to me seems like you always had a great head on your shoulders and you almost never got into maybe possibly bad money habits or ideas of how money works. So you kind of already had this vision. Was there anything though for you that had to change, like the way you thought about financial freedom and money and whatnot?
I just do whatever the next logical thing seems like, and so that's helped me avoid some bad decisions. Gambling money is a bad decision. It didn't never seem like the next logical thing, so I've done my best to avoid stuff that I don't have control over, which would mean I don't play in the stock market at all. I don't have a retirement account. Real estate, I don't know 100% that the rent's going to be higher next year than it is today, but if I can make sure I know what my debt is and I can cash flow, if I can make the property nicer and at least maintain the rents I'm getting now, at least I have some level of control over that. And so doing the next logical step has served me well. Thinking things through since the very beginning has helped me avoid some bad mistakes that I could have made. But I just try and think through as much as I can and then learn from the things I didn't think about along the way. But I try not to have consumer debt. That's a good one. I listen to Dave Ramsey a lot. That's helped me a lot. Believe it or not, Dave Ramsey is one of my business role models.
Oh, yeah.
for sure.
I read his books as well, and like I've shifted away from it, but I feel like I'm going back. Getting back to paying down the debt, right, and just simplifying things. He's a like massive real estate guy, like because he owns like his company and the massive building he's in and everything. So you can learn from everybody in this.
All right, we're coming up on about an hour, so I don't want to take too much of you guys' time. I'm always glad you guys are willing to do this. But maybe we'll wrap up with a couple more questions. Let's see. Hyder has a great one. Do we consider over leveraged to be the same as under owned? Any nuance there? Justin, your thoughts on that?
Under owned. Conceptually, it's the same thing. Yeah, I just never thought about it that way. Yeah. It's a different way to look at it.
Yeah.
Yeah, because in theory, if you're 100% leverage, which I have done projects 100% leverage, I'm not even an owner. I mean, conceptually, on paper, I am the owner with title and stuff, but it's a different way to look at it.
I would say no. Those are different, mathematically speaking.
Oh, elaborate a little bit.
Well, I did everything 100% leveraged.
Mm-hmm.
And I've had plenty of benefit from ownership. Being over levered, you have to go to definitions and go to math, right? If I buy a property for $1 million and I owe $1 million, some people are going to say I'm over leveraged. My point of view is if I control the debt amount, it doesn't matter my loan to value. What matters if you're over leveraged is your cash flow and your time. Because if I've got a 1-year window, I've got 100% loan to value, and maybe I cash flow, maybe I don't, I'm over leveraged. If I've got 30 years on my loan, I've got a great debt coverage ratio, and I'm 100% loan to value, I'm not over leveraged because my debt's not due anytime soon. I've got plenty of cash flow relative to my payment, and that comes from structuring intelligent debt. So they are different for sure. If you're looking at over leverage as a loan to value thing, then yeah, your point's true. It means you're under owned. But if you're evaluating it based off of functions of cash flow and time that you have entitlements to that cash flow, it's a function of debt coverage ratio and your time that will determine if you're over levered or not the actual amount of money you owe.
If you guys haven't seen, good morning, Dion, the man, the myth, the legend is here. So Dion is in the chat. So just also want to tell Dion, I don't know if you maybe realize how much you've impacted the three of us talking this morning. You've really kind of opened up our eyes onto kind of what financial freedom really means, and the right amount of cash flow with the least amount of doors. So yeah, I think you've impacted all of us and a lot of people in the chat. Cody, Justin, how much time do you guys have left? There's about 4 or 5 more questions in here. I don't know. I know you guys got to go. So,
who said I had to go?
Okay, Justin, I know you're on a time. So, what about you, man?
I have a call at 9:00.
Okay. Let's go with one more for Justin. And how about let's see. Okay, Flavio's asking. Sound like you guys are busy with real estate, but what do you guys do for fun to clear your mind?
100% for me is travel. So like one of the things that I track is how many travel days I do a year. So last year I think it was 116, and this year I'll be at like a 130. So basically 1 out of 3 days I'm not sleeping at home. This could be as simple as like this weekend we're going to Orondo, which is like central Washington, just like a 3-day trip. So I love that, to kind of break away, forget about all the problems, recharge, come back, and then get back after again.
Okay, before I know you gotta go, and thanks for doing this. Last question, then, Justin, real quick. I saw you did your fantasy football draft. Who did you pick, and what pick did you have in the first round?
Oh my god, dude, I suck. I'll have to pull it up. I had the lowest draft grade. I'm like, I'm going to auto draft from here on out because like I haven't really won at all. But my first guy that I got was and I've done this probably 3 out of the last 5 years. I got CMC, so Christian McCaffrey, assuming he's healthy, the guy is a beast. But yeah, I got a D minus, is what Yahoo Fantasy said. Everybody else was like A to B minus, and I got a D minus. So it's gonna be either first or last this year, probably.
All right, man. Thanks for doing this. We'll get you back on again soon, Justin.
All right, good talking to you. See you, Cody.
See ya.
All right, Cody. Let's see. What do we have for Cody then? Oh, you can answer that one from Flavio then. So, like I said, what do you guys do for fun to clear your mind?
I coach gymnastics. I've been doing gymnastics and parkour since I was 9. Just started before my 10th birthday. So that's been fun. I like working out. Helping others craft their portfolios is always fun. Meeting up for coffee. I used to do the consulting thing and I got out of that. So now I'm just focused on health and fitness and optimizing the portfolio alongside some of my mentors is fun for me.
Yeah, I love that. How you? So, what for gymnastics? What is the hardest, maybe move, or is that what it's called? Move to perform. What would be like the elite level?
It depends on where you're at. I mean, you could be on floor, pommel horse. They've got tumble track and rings, parallel bars. I like parallel bars and rings, but I'm not at that level. I'm far from it. But I'm working on iron cross. I'd like to be able to get that someday.
That's the one you're just your arms are out to the sides and you just.
Yeah, and that's definitely not the hardest one out there, but that's probably the hardest I'll ever get to.
Yeah, my shoulders would fall. um, Hyder says Mark Moss tore Ramsey a new one on a video yesterday. Not really, he just did a breakdown of methods. Okay. All right, maybe we'll wrap up with this last one from John, Deconstructing Dreams. He says, do you have a set percentage you have for vacancy, maintenance, capex, and then a separate reserve fund? How do you structure that?
I set 100% of my cash flow into reserves right now for the most part. I pay myself out of a couple properties, but not many. So I'm just focused on building the liquidity, building the reserves. But I would do it on a deal by deal basis because it would be unfair to say that I'm going to have a 10% maintenance budget on a brand new construction and a 10% on my old stuff.
I love that. Okay, final one then. Jen says, will you open up your own gymnastics studio?
Probably not. There's a lot of gymnastic studios where I'm going to be living in a few years, and I would not want to take away from the gymnastics org that is here in Moses Lake. I coach gymnastics at AIM Gymnastics, and they've got a great setup. I wouldn't want to give them any local competition. Not that I think I would be able to, steal the competition, but I don't want to create that type of environment here in Moses. It's not big enough.
Any chance we'll ever see Cody Davis on Ninja Warrior?
I applied a while ago. I didn't get on, or I didn't see the response, but I did submit.
How do you think you'd do if you got on? What would
The
be
bane of my existence would be if I got to finals, climbing the rope. That would be tough. It seems like rock climbers are mainly the ones that can do that. But the other stuff, like on the first few courses, I've got the grip strength and I can do the salmon ladder and the agility. I feel like I could get through the first few courses pretty well.
That'll be cool to see you on there one day. But yeah, thanks for doing this. Everyone, thanks for tuning in. Great questions. Thanks for keeping everything moving, everyone. Yeah, Cody, I love what you're doing out there. I'm glad we're able to connect. You and Justin giving a lot of great advice out there. And keep running the Saturday accountability call. And if everyone, like I said, I put Justin and Cody's Instagram pages, YouTube channels in the chat. So go follow them, subscribe, and go reach out to them if you have any questions. But thanks for doing this, Cody.
All righty. Thank you.
Thanks, man.
Yep.
Cool, man. Thanks, man. How's everything going?
Absolutely. Good. Yeah, things are good. I mean, I'm cash poor.